Hi, I'm Diane Gerdes. This is the Mortgage Answers. I'm with the Mortgage Advantage. It's a very warm June 24th, 2011 in Phoenix. The question today is, we have identified a house we would like to buy, but we were told that underwriting may require 2 appraisals. Why is that? Well, the answer is that the home is probably a flip that was either purchased at auction by an investor or an investor purchased it as a short sale, and these are becoming a lot more common. And FHA issued mandates for property flips. It wasn't in a mortgagee letter though, but not every bank follows the FHA guidelines, and it's called FHA 24 CFR 203-37 if you want to look it up. In other words, underwriting is going to be a little tougher, and many lenders will not originate flip properties at all. And all banks have modified guidelines when it comes to flip properties, whether you're purchasing it conventional or FHA. So be sure and check with your lender. One major bank I know will not do a flip property. They consider it a flip within any type of deed transfer within 12 months. Yikes. Underwriters look for red flags, and here are just a few of them. 1, if the sales price is above 20% of the acquisition cost. I mean, that's okay, but what they're looking for at that point is that they want the appraiser to note all the repairs, kind of a before and after. And by the way, if the investor took pictures to give to the lender, that is awesome. But they will require receipts, and they will require the appraiser to note all of these repairs as well as the receipts in the appraisal. If the appraiser cannot warrant the legitimate work that was done to substantiate the increase in value, then a second appraisal is going to be required. And truthfully, it doesn't matter if it is 20% more and the first appraiser did the most beautiful appraisal on the planet, a second appraisal may be required anyway. And if it's FHA, it will be mandated. They have to have a second appraisal if the increase in value is over 20%. If the increase in value is not due to any significant improvements, the appraiser is going to have to do extra work to provide the comps, to show the increase in the property value, and anything else that can help them to justify why they got it at such a low price and did not have to do any work to the property. And you guessed it, a second appraisal will probably be warranted. If the sales price is over 20%, over seller's acquisition cost, the seller can use their receipts to kind of get it down to the 20%. But keep in mind, second appraisals, no matter what the guidelines say, it is still up to the underwriter to determine if it's needed, unless of course it's FHA, and then it's mandated over 20%. Also, a flipped home utilizing FHA financing will require the home inspection to be viewed by the FHA underwriter. And that FHA inspection had better have all repairs, all noted repairs, completed before closing. They're going to require those repairs to be done. The reason for that, they want their first-time FHA buyers to be able to move into the house and not have to spend their money doing repairs that this investor who's making a profit should have done. Also, another FYI, if you work with investors, please don't let them play havoc with the deed. If they buy it, have them buy it in their LLC. But what happens is if they buy it under their name and then try to then transfer it over to an LLC, they may kick themselves out of being able to do FHA financing and some conventional financing depending on what their guidelines are. And I know that's not what investors want to hear, but even it may be the same people, but still, that's the way a lot of the lenders look at it. And they really only want to see one transfer every 12 months. Also, if you're working with USDA or VA clients, they do not have flipping guidelines. But again, check with the bank because they may. Have a great weekend and keep cool. Thanks so much.